each month, my goal is to make one less mistake. So if I made 30 in January, my goal in February was make 29. Being in Forex now for 16 years, my job is conservation of capital. I want to avoid the big hit because I know that the big hit can wipe out a lot of days, months, sometimes even years of gain. Every candle on this chart in front of you has a range of 34 pips.
The obvious question is, why 34? Hi everybody, this is Boris Schlossberg from The Trading Battle. Welcome to another great episode. Today, I have an incredibly special guest, a man who really does not need any introduction, because if you've been in trading business for a while, if you've ever traded Forex, you know that he is one of the legends. He's a great mentor, great trader, and certainly one of the very well-known personalities in the space of Forex trading. I have with me today Mr. Akil Stokes. Welcome to the show.
Hey, thank you for having me. Legend, no pressure.
No pressure. Exactly. Good to have you on the show. It's the first time you and I have spoken, although, of course, I have listened to you countless times on lots of different podcasts. You have a very interesting background, very interesting story. We've all been through the school of hard knocks, I think, if anybody who's been trading a lot. And I think you bring a lot of very, very interesting knowledge to the space, because I think many people have faced challenges, but few have been able to overcome them as well as you have, given this business. And, the other interesting thing is that I find with you is that while everybody else has kind of moved off to a million different products in terms of, hey, let's trade crypto, let's trade indices, let's trade stocks, let's trade futures, you have been very steadfast in trading Forex. So I kind of want to, ask, you're the OG product. Why is it just because, you're happy with Forex, or why have you not explored the wide universe of other things that everybody's playing?
Well, appreciate you guys having me first and foremost. And to answer your question, it goes back to the simple, if it ain't broke, don't fix it. It's one of those things where I actually started off in the stock market right out of college as an investor, if you can call me that. I was learning through the school of hard knocks.
I'm an investor.
And I went into Forex mainly because a friend of mine told me that, hey, this is an asset class where you can start with less money, you can make more money and do it in a shorter period of time. So, 23-year-old me is like, yeah, like this is awesome. Let's go for it. And
what year was this? Was this like 210s, 228s?
This would have been, so I started in 2007 in the stock market. I got interested in Forex, I would say mid 2008. I want to say 2009-ish, around there.
That was actually a great time because volatility in Forex was out of this world. This was the period of pigs. This was the period of interest rates, the period of risk aversion that was happening across the world because of the global financial crisis. I mean, I remember things were moving 300 points a day. So that must have been a pretty exciting time. Huh?
Yeah, it's funny you mentioned that. We were just having a conversation this morning with some of the traders I work with, and I was showing them kind of the historical, because today's been a busy day. Lots of movement in the market today with all the tariff news coming out. And the volatility is pretty high. And I was telling them, like, hey, this is how it used to be all the time back in my day. So we were just talking about that old period where I first got introduced to the Forex market, where, when it was the wild, wild west, and it was crazy. And a lot of these things that people preached, we believed in. And I would say, luckily enough, that I had more realistic expectations than most, and went through my school of hard knocks and eventually came out the other side. But it was one of the things where I ended up having success in Forex. I like the freedom of Forex a lot more than the stock market. I like the opportunities, the action, if you want to call it that. And mainly, I've been very successful in it. And there's just, although I do still explore other markets, I invest. I have hard asset investments. I have stock investments on the side. There's no reason to change kind of what I'm good at. I'm fortunate enough to be good at this. So don't mess things up.
So what is it specifically about that market that, intrigues you? Is it the bidirectional nature of it? Is it liquidity? Specifically, or is it just simply, listen, I really understand this asset. I know how it trades. I've been doing it for a long time. That's the main reason why I like to trade it.
So it's a little bit of both. One, it is liquidity. It is a for those who are new to the forex market. If you can imagine the stock market, like the New York Stock Exchange, being like a puddle of this big. The forex is massive, right? Because it's a global exchange, so there is that liquidity aspect to it. I do like the bidirectional movement as well. The fact that, and I'm a former sports guy, the fact that it is a battle. It is. If I'm looking at the euro dollar, it is the euro versus the dollar, and it is a direct battle between the two, making it very easy to kind of draw comparisons without too many outside influences. So I do enjoy that nature of it. And then lastly, just being in forex now for 16 years. I found my groove. I know the market very well. When I got involved in stocks, something that my mentor always told me was, hey, don't outsmart yourself, right? Don't invest in things that you don't know. And my knowledge is pretty limited. So the cool thing about the Forex market is that, hey, I know these specific things. I've been trading them. I've been looking at them. I know their personalities. It's like we've been in a long-term relationship, like with a wife or a husband or something like that. And that has increased my edge just because I know that, hey, the yen is going to move a certain way. The Australian dollar is going to move a certain way. And that certainly helped increase my edge in the market, just having that familiarity.
Let's talk about currency personalities because that's a really fascinating subject. So I'm going to give you the pair. You tell me the personality. So um, pound dollar. Look at that face. I wanted to start with the thing that everybody hates the most, the thing that is the hardest thing to trade in the
Pound
world.
dollar, uh, volatile until it's not volatile. So sneaky volatility where it moves pretty steady, but it's a sneaky volatile pair. So you don't notice, Brexit aside, you don't notice big jumps like the yen is very volatile, something like that, for example. But it kind of goes about its business quietly, but moves very well.
I think it's the herky jerkiness of pound that drives everybody crazy. It doesn't matter where your stops are. It doesn't matter what volatility envelopes you put on it. It doesn't matter where the ATR is. It's always going to blow through it and then go in the direction that you want it to go to. Like if there's a pair ever to torture a trader, I think pound dollar was it. Um, Now, like the cousin of it is pound yen.
So we used to have a nickname for the pound yen. We call it the beast right now. I used to call it the graveyard. When me and my buddy first started trading, we didn't know what we were doing back then. So we'd place trades, like go to sleep and whatever like that. And we would always wake up like stopped out. And I remember, he was my roommate. I knocked on his door like, hey, the pound yen killed me. And like we'd end up in the graveyard because that is another, if the pound dollar is sneaky volatile, pound yen is like massive ATR, lots of volatility. It is like a bucking bronco. You can go for really good rides if you're on the right side of it, but if you don't know what you're doing, it will destroy you.
Now, speaking
Uh,
of that, by the way, like, what is a good ride for you? Like, where are you most comfortable in terms of time frame and execution? What do you operate on?
my sweet spot is 4 hour hourly. So I like using a three time frame combo. I like the daily chart as kind of my, looking off the cliff, looking at the valley below, outside looking in, bigger perspective. The 4 hour is kind of my sweet spot in the middle, and then the hourly is kind of if I were to have a microscope and I really want to zoom in and dig into like a very small specific portion of the chart. The hourly is where I would go. I like those. I like those three: daily, 4 hour, hourly. That's the three higher time frame or three time frame combination that I personally use.
What about the duration of your trade? Where is like, is it a 12-hour trade, 24, 72-hour trade, 1 hour trade? Like, where are you as far as like the average duration of your trades go?
So obviously it depends on the specificity of the trade, but I tend to be in trades for probably anywhere between a few hours, 3 or 4 hours, to maybe like 12 hours, something like that. Obviously, if I'm in a bigger trend continuation trade, for example, and it's rolling, there's a lot of opportunity. I'll hold it until it gets there. I don't have a specific time stamp on my trades, meaning I have to be out there a certain period of time. But for the most part, it's usually a couple hours to a half a day for most trades to play out.
So then what's like, is it a 30 to 50 pip extraction basically? Is that sort of where you're looking as a on a pip basis, where you're extracting, trying to extract 50 to maybe 100 pips if it's a really good day out of a pair?
Yeah, in general, at my nature, I'm a counter trend trader, so I prefer to be,
Ah,
I
ah,
prefer to
you
be
are
in the
you
market. out the market very, very quickly every once in a while.
If only I wasn't born to be a counter trend trader, I would be so much richer. But yeah,
I agree.
it is a temptation. It is a temptation that always leads me to the wrong path. It's like the ultimate sin. But we'll talk about it. Um, it's fun. So a couple of other. Let's talk about Kiwi, Aussie personality. I'm just curious personality.
They are basically twin brothers or brothers or sisters or really close cousins. Slow and steady. They don't really move too much. The ranges aren't great. For me, I like them. They have really good technical setups, but you're not getting a lot of action on those pairs, and they tend to be the same. If something's happening on Kiwi, it's probably going to be very close, if not have happened already on the Aussie.
If you were to sort of divide top 5 pairs in terms of percentage of trades, like these trades, I do the most active ones, these are the least active ones. What would be that list? Like, what are your most active to least active pairs? And maybe if you want to give me the percentages, that's fine. If not, it's no big deal. I'm just curious.
Top 5. Let me see. I would say, and this will probably catch people by surprise, because I think everyone expects the euro dollar to be number one. That's the most popular pair. I actually don't get a lot of setups on the euro dollar, despite the one that I showed you earlier that we're looking at right now. I don't really find it to offer a lot of pairs, and I over the years I've grown to know the reason for that. I would say for the most part, euro yen is probably what I have the most of my activity on. Euro yen, dollar yen would be number 2. Number 3 is going to be a sneaky one, Aussie Canada, and that's really due to the counter trend nature. Aussie Canada is very similar to like a euro pound. It doesn't really do much. It just is range bound, range bound, range bound. But for my specific trading style, where I'm counter trend, I'm looking for bounces off support and resistance. It offers a lot of opportunity for me. I'm going to say after that, sometimes dollar Canada, I go through streaks with it where I'll have like 2-year streaks of lots of activity, then 2-year streaks of nothing.
I don't know. This is my personal opinion. I wonder what you think about this. After I despise the pound, I don't think there's a pair I despise more than dollar Canada in terms of its ability to just shake you out of trades. And I actually have, and I am not a conspiratorial person, but I definitely do have a conspiratorial view on dollar Canada. There are 4 banks in Canada that basically control all the finance in Canada, and they're all making markets in dollar Canada. And I'm absolutely certain that they just run the book day in, day out, just sweeping stops all day long. I mean, I'm probably paranoid, but I'm just curious if you ever felt that way.
Well, I'll tell you what, it's funny because I mentioned as one of the pairs I had a lot of activity on, and it goes in spurts where it's like I'll have 2-year stretches where it's very directional and I'll have a lot of opportunities. And then there'll be stretches where it's like there's nothing for like a year. And I'm not a fan of the pair necessarily. But very similar to what you mentioned, I found it, for me, maybe aside from the yen, it's the easiest pair for me to go for a home run trade on. And it goes back to your conspiracy theory where, and for me, home run trades are where I'm a technical trader. So I look at technicals first. I do keep an eye on fundamentals, but they are secondary. So meaning that I'm not going to make a trading decision off of the fundamentals, but if the fundamentals happen to line up in the same direction as my technicals, I can often shoot for more. And I found dollar Canada to be one of the easiest pairs where I have a technical setup. The fundamentals are aligned with my technicals, and I can make some much bigger moves. And usually it's times when the banks kind of initially say like they're not going to do something, and then they change their mind last minute, and it does it. And they're pretty straightforward with what they do, and which would lead into your manipulation. Like they don't do all the talk where it's like, Jerome Powell talks and says nothing.
Right. No, they're pretty straight up.
They pretty come up. Yeah. They're like, hey, we're going
to raise rates. That's it. And it just runs. And then, the banks, the actual market makers in Canada, which is, Bank of Montreal, Royal Bank of Canada, TD, and who's the fourth one? I forgot the fourth one. But yeah, I mean, they just all, I think, really control the currency very, very tightly.
It's blatant manipulation, and like we have this conversation a lot about manipulation. If it happens, it exists. You know what you're getting into. If you know how to use it in your favor, then use it.
And like you've certainly spent enough screen time to like. Do you ever like actually really see? They're really screwing. They're really running. They're running those levels just to sweep everybody out. And I'm just, and have you had, actually learned from that, been able to take advantage of it?
Yeah. I was the victim for many years. And then as I learned more about price action, learned about supply and demand and manipulation and how it works, it's one of those things where I went from complaining about it, like, oh, they're after me and they are, to like, hey, this is the game. These are the rules of the game. I have two choices. I can lose money, sit and complain, or I can adapt and adjust. It's one of the things we teach our traders where it's like, hey, like, don't get cute with your stop losses. Like these banks know where they're at. It's pretty obvious. The public is pretty predictable. It may cost you a little bit of a bigger risk on your trade, but to give yourself that extra safety and put yourself in the best position possible, it can pay out. And then every once in a while, you're going to get got. That's what the markets are like. That you're not gonna avoid it 100%. But if you learn how to read price action and you're smart about it, you can at least limit the chances of you getting caught up in those sweeps. It cost me a lot of money to learn that lesson.
Hey, I was going to say, I think every trader learns that you need to be a victim before you can become a victor. You got to go through that process. And then you finally learn how the game is played. Yeah. So speaking of this, or like, how the game is played, you know, you've definitely chosen the less conventional approach, which is the contra trend approach. You like to sell tops, buy bottoms, which, ironically enough, that's like people always say, oh, I'm a trend trader. I'm a trend trader. I find actually 99% of retail traders, including yours truly, love to try to pick bottoms and sell tops, do it very, very poorly. And people pay lip service to trend trading, but they actually try and do this reverse. But to do that well is truly an art. So, I wonder if you could, maybe shed some light on some of the things you learned over your period of trading. Maybe you can share your charts with us. You said you had a euro dollar trade that was working within the parameters that you had. So maybe, we could take a look at what you were doing on the charts, how that fit into your worldview and trading view. Elucidate us a little bit.
This is actually something we looked at this morning, and there's still an opportunity here. But just to go back to the counter trend trading thing, it's
Wait,
one of
so
those things.
before you talk, I just want to, what is that 34 OR? Is that a tick chart or something?
Pretty much, yeah. It's a range bar chart, but same thing as a tick chart. And I'll walk you through kind of the initial idea here. So today is an interesting day. I don't know when this is going to be shared or whatnot, but this is Liberation Day, right? So the tariffs came out yesterday, and the markets are going crazy.
We're
And
all, we're all being liberated from our money today. That's
yes,
what right?
yes. And if you're watching this is the daily chart right here. This daily candle, although it looks like this now, from watching it this morning from like 5 o'clock, right? It has gone like this. It's gone up and down and up and down. The markets don't know what to do. And what that does is it makes it very difficult. You'll see as we go down to the lower time frame to really understand what it's doing. So the tick charts or the range bar charts, it's for the viewers that may not be familiar with it, instead of printing a candle off of a specific time duration, like 1 day, 1 hour, 4 hour, it prints a candle each time the market moves out of a range. So this one is, although it says 340 because of like the micro pips and all that stuff, every candle on this chart in front of you has a range of 34 pips. So once a candle moves out, or once price moves out of the range of 34 pips, it prints a new candle. And what it does, it just gives me a cleaner and alternative view at the market, allows me to see some clues.
The obvious question is, why 34? Is that some mysterious, mystical, magical number? Or you just kind of like that number?
Ooh, I'll tell you why, right? So I use Fibonacci, not as much as I used to, but I still use Fibonacci's in my trading, right? And Fibonacci, these magic voodoo numbers that exist in like seashells and petals and rabbits and all this, the length of finger to wrist, all this weird stuff that apparently is true. I don't question it.
Not including, and not including even the Mona Lisa, right?
Yes, yeah, right. These golden ratios. So I used to pick a lot of random numbers, and when I first started off with the range bar charts, because I was doing a lot of Fibonacci stuff out, otherwise, it only made sense to look at time durations that were based on Fibonacci. So like when I was a day trader, I'd go from 5 to 8 to 13 to 21 to 34 to 55. I think 89 is next. So I always kind of got in a routine of following those numbers. I'll break it down real quickly what I was looking at. So we had this big run right here.
So 34 is a fib number. Is that like it's a fib sequence? It's like one.
Yeah. So it's after. So the fib sequence is was it the number is the sum of the two numbers before it. So 3, 5, and then 8, and then 13, and then 21, and then I can
Because
tell I've been doing it for a while.
I'll be honest with you, it's a really clean looking chart. I was like,
Which, yeah, and it breaks up the mess. So, in my training, I go through this process called IPDE. It's a 4-step process that is my routine essentially. It's identify, predict, decide, execute. So I want to identify what is price action do.
what's the third one? Predict,
Identify, predict, decide,
decide,
execute.
and
Yep. So I want to identify what am I seeing on the chart. Based on what I'm seeing, I want to make my prediction, so create a directional bias. Then I want to decide, okay, based on this prediction, how or if I can get involved. That's the decision part. And then E is probably the hardest part for most traders. That's actually executing the trade. So, waiting for that signal to come and being like, like buy or sell. So if we walk through that very quickly, we identified obviously a lot of volatility in the market. And I asked myself, where did price go to, right? And I looked left, we came right to a previous level of structure resistance back in, back in August of last year. So if there's a place for profit taking for all these bulls, this is going to be the level. And as we went down to lower time frames, right, you can see kind of the rejection right here showing either interest from the bears or profit taking from the buyers. They're both the same thing, sell orders. And we ended up going down to the hourly. Now on the hourly, you could see things got really junky, right? These candles were going up, they're going down, they're going up, they're going down, which made it really, really hard to see. So this morning we ended up going down to a range bar chart just to get a clearer view of that. And what we were looking for was a double top, so a retest of structure. So price action came up here. I'm going to change this color to make it a little more visible for you guys. We ran into that level of resistance that I showed you on the daily chart. We bounced off and we're looking for a retest and, more importantly, a hold of this level, giving us a double top. There's a few things that also give us some confirmation. Not only do we have the structure looking left, we have our relative strength index right here. That's my indicator of choice, being massively overbought. I have my, by default, traditionally the overbought is 70. I personally use 80. You can see we were all the way at about 90, so really overbought.
Yeah. 80 to 90 is really strong signals, yes.
Exactly. We came back up and retested the highs, and we got bearish divergence as well. So you can see that our price action is putting in equal highs. Our indicator is putting in lower highs. That's another clue that we can add. And my style is all about adding clues together. And we're looking for a short off of this level right down to our previous inside level of structure right here. So you can see the first part of the job is done. We've come down to break and close below the peak of the double bottom. Hopefully we can continue running down here. Now, if a trader is late, there's another opportunity, right? Once we violate this low, that's confirmation that, hey, this double top is working. If price were to retest again, that would give us another opportunity to perhaps get involved, maybe if a trader didn't get involved already, and then ride it back down to this level. And here's where the counter trend nature comes in handy, where, as a counter trend trader, I'm looking to get in and out. It's very short, sweet moves. I'm not looking to hold on for more glorious profits here. I want money from here to here, and then I want to be gone and look for the next opportunity. And I wasn't always this way. I learned as a younger trend continuation trader that I just don't personally have the patience to let things ride. I would enter trades, it would be in profit. I'd see the ticker and I'd be like, some money is better than no money, boom, and take it out. And I would repeatedly do that. And then of course, what would happen, right? Price would go to my original target and I'd be like, oh, I got 50 pips when I should have got like 150 pips, and I'd beat myself up. But I just wasn't psychologically disciplined enough at the time to allow the trades and have confidence enough to allow the trades to play out. So when speaking to my coaches and mentors, they talked about the counter trend as like the counter trend style, where it's like, hey, you're going to be in and out shortly before you have enough time to think and go crazy. And that was just a much better fit for my personality. So that's how I initially got into counter trend. I later added trend continuation as I became more disciplined and more confident as a trader. But for me, it was just figuring out what was the best situation for me to be a profitable trader. And that was it.
So in this particular case, there are two counter trend entries. One is that double top entry, which is the two arrows. And then the other one is the belief that that this is going to be a resistance zone. That so you let's say place a short somewhere in the middle of that zone with I would imagine a stop above the zone, because that's when you'd be clearly wrong if euro broke out above.
Yeah, correct. So I would wait for price to retrace here. I'm more of a conservative trader, so I'd wait for a reason for entry. So I'm not aggressive enough just to put a limit order there and sell. I need a reason for entry, like a lower low, lower close. So like if a candle were to come up and I'm just going to try to draw one out here. If we were to do something like this,
Like, yeah,
and
this
then
is a
go
really
low.
this is a really interesting point. I think that um, a lot of good traders practice this, and I try to practice this very much, which is that you want to enter a long on a green, or you want to enter a long on a strong on a candle that's going up. Doesn't matter whether it's over across time or ticks. You want to enter a short on a candle that's going down. Like whatever ultimate granularity that you're reaching, you want the price to be confirming your prediction, right?
Yeah, I always put it like this. I say our job as traders, because we get a lot out there on the internet about like, oh, your prediction is wrong, when you're just saying, hey, I'm looking to short here, but you're not actually getting involved in it. I say we want to be predictive in our analysis, reactive in our execution. So it's exactly what you said. We want to be predictive, saying like, hey, this is the zone, the level, the price that I want to get involved in. But you want to be reactive. You want to wait for the market to give you that clue. And like a positive candle is a great clue for the market that like, hey, my prediction is probably more likely to be right than wrong. And yes, you're not going to get the great, you're going to lose a little bit on the
Right.
entry, but
I mean, the flip side of that is that any momentum entry is always going to be the worst entry than the limit entry, but it will also have the higher probability. That's the difference,
yeah, and that's the balance, right?
Yes, the balance, because the other way it's a constant game of buying falling knives. Sometimes they stop, but a lot of times they just go right through your hand, and it's just not really pleasant. I've had situations, I'm sure you too, where you've just like bought red, stop, bought red, stop, bought red, stop. Just like literally 3 or 4. You're like, how can it possibly be good? It's definitely overbought. It's at 90. It can go lower. It will stop at the point where you're margined out. That's the
Yes. Yeah. The market does not care.
it does not care, and it will actually go. So yeah, so I've actually learned, also through the school of the hard knocks, that if you're gonna be long, you wait for the green. If you're gonna be short, you wait for the red. I actually even have that in my algo. I have like a MT5 that does not enter unless the buy is confirmed by the price angle. It actually works great. Actually, it's perfect. So yeah, I mean, so you are of course not just a great trader, but also a really well respected mentor and teacher. I'm just wondering, talk a little bit about that. How did that come about, and what do you do? How do you practice that art? What is your teaching mentoring business all about?
So a funny story is I became a teacher and a coach by accident. Never wanted to do it, and I'll tell you how it happened. Hopefully the shorter version of it. But so when I was a trader starting off, I was very bad, and I had gotten mentorship and coaching myself. And one of the things that they told me was, Akil, you need to take keep a journal, right? And I'm like, again, I'm a former athlete, like I'm a man. I'm not taking a journal or a diary and that stuff. I don't want to write my feelings down, but they're like, look, you got to do this and blah blah. It does X, Y, and Z. So I actually started a blog because it was a more manly version of a diary in my mind back then. And on this blog, I would post every day, and I would just kind of like do summaries of my trade, like a dear diary. Today I got stopped out because I didn't wait for the green candle to buy. I got in premature, and that knife went right through my hand as I tried to catch it. And it was a public journal. I didn't expect anyone to read it, but it was public. And before you know it, it started catching steam where like people started reading it. They started leaving comments, and I'm like, why? And they're like, well, they said everyone else like on the internet is always bragging about how great they are, how good they are. Like, they said you are a breath of fresh air because like you're actually telling it how it is. Like you have good days, but then you have a lot of bad days. And like in my writing, I would journal about like what did I learn from the experience. They said it was a great way to learn. And my mentor caught wind of that and they were like, hey, you should start coaching. And I was like, no. So I went on to do the money management thing for a little bit, which I absolutely hated. It destroyed all of my love for trading, to be honest.
What was it about money management that was just so painful as a business?
So two things. One, it was I didn't feel fulfilled in my life in general as a person, and this is why I coach track. I work with youth as well. It's like I believe in life we should be doing things that make us feel like we're making a difference. Like I go home at night and I feel like I'm helping someone out in some way, even if it's in a very small way of teaching them to be financially independent. It's a small thing that I'm doing to make this world a better place, right? So I wasn't getting that out of just helping super wealthy people become even wealthier. I was like, okay, you've already got like whatever $1 million. Uh, what am I doing here? That was one. The bigger thing was the stress. So believe it or not, back then, luscious hair, full hair, I could comb it and brush it. It was, I'm telling you, it was amazing. But the stress of managing money for these individuals, and back then I was pretty spineless. So I would get texts and emails and calls of from some of these clients saying, "Hey, did you see this? You should do that. You should do that." And in my mind, I'm like, "Well, I got the plan says I need to wait for this, and I shouldn't do that because I'm already short that." I didn't have the stone, for lack of a better term, to stand up to and be like, "Hey, this is how I trade. You gave me the power to invest. Let me do what I do." I would be easily influenced, and then I would lose money. And I'll tell you what, the most impactful story was this. So I was on a hot streak, right? I had about a 3 month hot streak. I was on the heater. I'm excited. I'm talking to this client like, yeah, 3 months, we're hot, we're doing good, right? I'm counting my commission money. I'm like, this is awesome. And he's like, yeah, but shouldn't you be making more? And I'm like, well, no, risk, risk management, great traders or good traders are great risk managers. We want to, be smart about this. He's like, yeah, but if you're so hot, we should like triple the position size so we can make this much. And again, I was spineless. So I was like, no,
Wow,
we really,
it's so nice. This is like it's basically all of your own worst voices, but amplified by the clients who just
so I gave in and I'm like, it's the client is always right. It's their money. And I'm like, okay. So right after this 3 month hot streak, I know what's going to happen, right? I don't have 3 month hot streaks like really, really hot. I know that a drawdown is coming. And we tripled the position size right into a drawdown. And I remember I lost about, yeah, it really wasn't a month, but in pretty much a week, it was like 30K in a week. And it just like,
it was
and
just took all this thing out of you.
yeah, and I got blamed, of course. And again, so it wasn't fun. It was stressful. I didn't enjoy waking up every day and looking at charts. I was scared. I was nervous. Added to all the other psychological stuff that just comes with trading, and I just didn't feel good. So I got out of money management just kind of to save my health. I was trading on my own, and then my mentor knocked again. He said, "Hey, we're still looking for if you want to do it. Like we think you have talent." And I was like, you know what, let's just whatever. Like my mentor gave so much to me. This is my way of giving back. And then I fell in love with it after that. So I never thought I would be in this space of teaching. Never thought I deserved to be a teacher.
Right. So you're a track and field coach, and obviously that requires explanation of technique and analysis, patience, nurturing. I mean, psychology, right? Yeah, exactly. Like all of those. I mean, it's a very, very technical sport. So I wonder there must be a lot of similarities in terms of having those skills to be transferred over to teaching people how to trade forex in terms of same type of ideas, right? You have to nurture all these people along the way.
Yep, it's very, very, very similar. I never thought they would, but they are pretty much hand in hand. One is just athletics, one is money, but the lessons are pretty much the same.
I was going to ask you, do you think that athletics, being an athlete, has that made you a better trader, a worse trader, or it has really no impact? I'm just curious how you.
Uh, Most definitely a better trader. From my experience, most of the athletes or like military people that we work with go on to become really good traders. And there's two reasons for that. One is the work ethic and attention to detail. We know that anyone could be a good trader. It just takes a massive amount of time, energy, effort, and you need to be consistent in that.
That's all. It takes nothing, right?
Yeah, that's it. Just that. Athletes are pretty good at being disciplined, self-motivated, consistent, because they're used to, like, just waking up and doing all the dumb stuff they have to do to, like, to keep their body alive and compete. Military as well, but it's also the discipline. And I would say this: my mentor was military, but for me, I spent so many years and decades getting yelled at by coaches, that it just mentally hardened me, where I understand, like, this is the game plan, follow the game plan. Don't deviate from the game plan. Coach says this, you do that. Like, I am good at following directions. And in trading, with our trading plan, essentially all we're doing is following directions, right? We have very specific rules for what we should be doing, what I'm looking for. It's my ability to not deviate from those rules and then trust that bigger picture, right? Process over outcome, that bigger picture. If I keep doing the things that I'm supposed to do, I will achieve the result that I'm supposed to achieve.
I think that's such an interesting point, that I think that's literally the single greatest flaw of almost everybody, including yours truly, who's the worst of that, is nobody follows directions, including your own. Like, nobody follows their own. Like, there are thousands of trades that I do, and there'll be 1,001 that is, it's like, it's not that trade. It's the oh, let me buy the, I know this is overbought. I know this is oversold. There's no signal. I have this statement: no signal, no trade. Right? It doesn't, and you still go, oh no, I'm not going to follow that rule. And always pay. Even when you don't pay, you pay, because what happens is, if you don't pay, you're like, oh, I'm going to do it again, and then you pay it the second time around.
It's human nature.
It's human nature. But that is, I mean, like, if I would, like, I never thought about this, but if somebody said to me, what is the single greatest reason why most people fail, is because they don't follow the rules. Like, everybody says they do, but, oh, I took a strategy and it didn't work. No, you didn't follow the rules. I guarantee you. Like, I almost guarantee you that you didn't follow the rules.
It's the same thing with like diets, right? It's like, well, I'm on this diet. I'm supposed to lose weight. How come diet's not working? Well, were you breaking the diet and eating sleeves of Oreos at night? Well, yeah, but, well, come on now. Like,
that doesn't count. It was just it doesn't count, right?
Trading costs us money when we do that.
Yeah, it really does. I mean, that is the one thing about trading, is that it will slap you silly very quickly, because in other parts of life, I think we can get away with murder. Like, there's a lot of places in life where you could just cut corners, nobody really notices, and you could go for a long, long time doing that. But in trading, it's like instant. You try, you're cutting corners, boom, you're dead. And it's really hard to. And so, what do you do with your students? Understanding that nobody is really disciplined, that even the most disciplined people are not disciplined. How do you sort of create structures that help them avoid the worst of their impulses?
Well, one, we work a massive amount on trading psychology. We have specialists that come in to talk about it. It's the creation of a plan, building the trust and belief in that plan. Because I think once you trust and believe it gets easier. We're still going to make mistakes, right? I make mistakes as well, but instead of back in the day where it was 30 mistakes a month, maybe it's one or something like that. So it's also understanding that we're going to be limited in our mistakes.
Is that something that you track? Like, that's an interesting thing. Like, yeah. So you track the mistakes, right?
Yeah. So let me tell you this. So this was the moment I became a good trader. I was bad for a very long time, and it's the end of the year, and I'm bad, and I'm blaming broker, coach, system, mom, dad. I'm blaming everyone but myself. And I don't even know why I did this, but it was at the end of the year, like in December, and I decided to do an A/B split test. I said, I'm going to go back and review. I was ready to quit. I said, I'm going to review all my trades, right? And I'm going to take a look at my actual results over here. And then I'm going to go and take a look at what my results should have been if I would have done the right thing, right? And I do it. And I'm like, oh, crap. Like, it's not my strategy. Like, my strategy was good. Like, it was me. I made all these mistakes. So what I decided to do, and by this point, I'm living by something called the Kaizen philosophy, which is Japanese philosophy, where it's like, just get 1% better each day, and then, like, years from now you'll be that many percent better. I said, I'm going to make it a goal, Akil. I said, I need to eliminate those mistakes. It was obvious that was what was killing me. And I said, each month my goal is to make one less mistake. So if I made 30 in January, my goal in February was make 29. If I had made 25 in February, my goal in March was make 24. And I focused on this, and I got to the point where it was like April, and I got my broker statement. My broker statement usually has the parentheses around it, so you know you're in a negative, and it didn't. And I called my broker up. I'm like, hey, I think you sent me the wrong statement because like I don't make profit. And they sent me another one. They said Akil Stokes, account number, blah 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 blah, and it was positive. And I was like, oh crap! It hit me. I was so focused on just following my trades, my plan, and not like just profit or loss that I had become good, and I never looked back.
I think I heard you on a podcast say that you actually at that time did not even look at your own P&L. That's why you weren't aware where the P&L was. You were just doing the actual trades. You said, I'm just going to do those trades. I'm not going to look at the results. And then you looked at it, I guess, what is it, a month later or 3 months later to see what the results were, right?
Yeah, I was ready to be done. Like I had quit my 3 jobs to become a trader full time because I thought I'd be trading very, very quickly. And it wasn't working out. And I had pretty much given up. I said like, I'm going to, finish up until June or something like that. And I'll go back and start working again. So I just like didn't care, and not caring about like the profit was probably the best that ever happened to me. And it was a game changer. It was amazing.
Yeah. I mean, it's fascinating. So the mechanics of you tracking those mistakes, when you have a trade plan every day, is that written out? And then post trade, do you sort of write a note? Yes, I executed exactly as I planned, or no, I lifted a stop here, or I moved my target. Like, is that the kind of notes you make? How do you determine a mistake from a properly executed trade?
Yeah, so I have a section in my, I log my trades, date, entry time, all the fun stuff, profit, loss, how much this. At the end, I have a note section, and there's a grade section at the end of it where I'm grading myself on initial analysis. I'm grading it, which is my analyzing the market to make sure it's a legit signal. I have my execution, like did I get involved in a method that I'm supposed to? I didn't just close my eyes and get involved. I waited for whatever my reason was. I have my trade management, which is the stuff that I did during the trade. Did I allow the trade to play out? Did I actively roll stops? Did I make any mistakes? And then I have an open note section where it's just like, I guess, observations like, hey, didn't know tariff news was coming out. Probably shouldn't have been involved in the market. And I just consistently do that. And what I found is that, one, I'm able to grade myself on if I'm making mistakes or not, or how good my trade was. It holds me accountable because I know right away if I messed up or not. And then it provides observations where it's like, if I'm consistently doing something, like if I'm consistently trading during an FOMC release and I'm consistently losing, it's only a matter of time before I realize, like, hey, dummy, you probably shouldn't be trading at 2:00 or during this day. So it allows me to make adjustments, or it could be technical adjustments as well, like, hey, levels of structure or different entry techniques. And it allows me to keep growing and developing as a trader and potentially add or remove things in the future.
Is it a quantitative? Does it distill down to a number, or is it more like qualitative, where you just sort of say, this wasn't the perfect, like, how's your analysis, like, in terms of determining that's a mistake versus a mistake-free trade? How does that work?
More qualitative now. It's either a yes or no, whether it's mistake-free or not.
Okay.
If I followed everything, then it's a one.
Yes. So it's binary. So it's basically binary. Yeah. Okay. All right. That's cool. That's really, really cool. One of the things that people also struggle with is not just risk control, but position control. Like, if there's how do you generally recommend people size their trades? Let's just take a typical $10,000 account. What would you allocate as risk? Like, what is maximum risk per trade on that type of account to you?
For me, 2%. I'm not going to go over 2%. I'm very risk averse. As a newer trader, I always recommend, start small. When you are, I guess, the younger you are in trading, the more prone you are to making mistakes. So the more prone you are to making mistakes, the less risk you want to have. You don't want to risk 5% if you're in a position where you started trading yesterday and you're probably going to make a lot of mistakes. As you get better and as you get more disciplined, as you get more skilled as a trader, if you want to increase your risk, then, that's on you. And I never tell anyone how to spend their money. But for me, it's, I guess my goal is yes, I want to make money, right? I trade to make money. There should be no ifs, ands, or buts about that. But my I am risk averse. My job is conservation of capital. I want to avoid the big hit because I know that the big hit can wipe out a lot of days, months, sometimes even years of gain. So, my goal is I want to be able to survive the bad times with limited drawdown and then take advantage of the good times. And I'm not looking to hit big home runs and become an overnight millionaire. It's a slow, steady path. You add some position sizing strategies to that, you add some compounding, and over years, amazing things happen. It just takes a lot of patience though, and not thinking about next week, but thinking about kind of, 3, 4, or 5 years from now.
Yeah, that's very hard to do because we're all focused on the next minute as far as that goes. But what I was going to say is, um, in you were talking about positive compounding of the account. Do you ever think about also like, or do you ever tell people that it works exactly in reverse? That negative compounding is just that's the really hard part. That people, you make a mistake and then you do a second mistake because you want to correct the first mistake, and that's how you kind of ruin the whole account.
Yeah, there was this I don't know where I found out. I saw this chart before. It was called I did a video on it. So it was like a drawdown chart, but it was a chart showing you after you lose a certain amount, how much it actually takes.
How much harder? Yeah, we all see the graveyard of death, where it's like if you lost 75% of your account, you have to make 400% just to get right. At which point, I just might as well bury the account.
Yeah, like who's doing that? Like you dig yourself that deep of a hole. Like it's like you're just like it's amazing. Like you got to you're already bad, and now you have to be even better to just
Right.
get back to break even.
Get
But
back to where you were before.
wanting to make too much in the first place is probably what got you in that hole. It's like this. Oh man.
No, that's very tough. What is like these days? What levels of drawdown can you live with? Are you like is there a percent where you're okay, this is historically okay, I'm okay with it? What do you accept as that?
I can probably go up to double digits. I think
Like low double digits, like 15 and under, right? Like maybe somewhere in that.
yeah. So like I think like 13 is probably where I don't want to say normal, but I'd be comfortable with 13. I went a couple of years ago. I had it was beginning of the year. I had a drawdown of 17%. It was January 1. I was all hyped up about a new year, new year, new me. And I just went straight into like 6 months of
So
like,
what happened? Like was it the market's just not cooperating with your structure? What precipitated that?
yeah, in hindsight again, so being a counter trend trader, a lot of my trades are based off of, structure and bounces off of it. I think it was a new year. There was this optimism. There were, just very directional markets, and that's horrible for my type of trading. And it just elevated because again, you do your review in December. I think the 2 years before I had my best trading year, and that previous year was good, but it wasn't my best. So I'm hyped up, like, yeah, this is good. I'm going to get back to how I was 2 years ago. So I had all these expectations, like most people do on January 1, and it just went straight down like 17%. And it made for a great lesson because I was telling traders, I'm like, hey, like everything evens out. Like sometimes you take your hits in the summer, sometimes you take them evenly distributed. I just took all of mine at the beginning of the year. The rest of the year was fine. I literally took like the biggest drawdown the first 6 months, and then everything else was just kind of steadying up. It
What was your mindset during that time? How were you able to sort of handle the stress and the pressure?
well, no, fortunately at that point I've been trading long enough to kind of know that, believe in myself. I am successful. I've been through rough patches before. I will succeed. But like I honestly question myself. Like, and every time I go through a big drawdown, I question myself. Like I go through that period where I'm human like everyone else, where it's like I look at myself in the mirror. I'm like, do I actually know what I'm doing? Like, how come, like, have I lost it? And you get these fears, and something I do to combat those fears, because, going back to athlete, when I would have bad games, my coach or make a bad play, my coach said, Akil, you got 5 minutes to get all crying and whining about it, and you got to move on. So I'm very good at
Just like letting it, taking it out, having a nice, having a
So-
nice healthy cry, and then moving on.
Yep. Something I always do is this. I do two things. Mike Belfiore taught me this one thing. He said, find your go-to trade. So if I'm missing shots in a basketball game, like try to get to the foul line or try to get a layup, try to get something easy. So look for the most easiest setups, like your grade A setups on the chart, and just try to get a couple of those to build the confidence back. Two, I always go back to my training. And I watch videos, and just to kind of reconfirm that, like, okay, I'm not dumb. I haven't lost it. Like I'm doing the right things. I'm looking at the right things. The market just isn't agreeing, and that's okay. So it's tough, but over the years, I developed those tactics to kind of deal with it until things get good. But I think it's cool to hear that a professional trader, a legendary trader, I think the same way you guys think. Like I get depressed, I get upset, I think I lost it, I think I suck. I'm just very good at digging myself out of that mental hole before it gets too bad.
Yeah. Just take a nap, wake up, take a
Yeah,
run.
get away from the computer, go somewhere and do something.
So, time for our quick fire friendly round for questions. Very first trade, legendary win or an epic flop? Do you remember that?
Epic flop because I didn't know what stop losses were back then. So it was one of those trades where it's like I put something on and it was like up, and then I went to sleep and I came back and it was down.
And it was
And
down.
I was like, what?
Eh,
This never happened on the demo account. The demo account, it just keeps going up, right? So it was a bad one, which I think is probably best because it taught me a
Wait,
lesson.
do you remember what pair it was?
Probably some Australian pair. I don't know. I don't remember for sure, but I want to guess it was some type of Australian pair because I think like it was a bit of news that came out at night.
It was probably Eurocad, which is notorious for like.
That's another thing.
Yeah.
That's a stupid. Yeah. I don't trade that.
I mean, it all depends. Like, my partner absolutely loves it because, like, if you're a momentum trader, that's the pair that will always give you the 20 pips you're looking for. So it always gives you that squeeze. The book that every trader should read that isn't about trading. That's actually interesting. A non-trading book that you found super valuable for whatever reason.
Non-trading. Oh, there's so many back here. Okay, I got one. This was a book that helped me in my weird period of trading. It was Awaken the Giant Within from Tony Robbins.
Oh, you're kidding. I think that's not something I would have thought that you would.
I'm not a big Tony Robbins fan, but my mentor gave it to me because we were talking about like I had no self-confidence or no belief in myself as a trader.
That's what I was going to ask you. That's probably what helped you, right? Because as you said, I mean, so much of this game there's the technical aspect of it, which is obviously very important, requires lots of work. But then beyond the technical aspect, you have to have the confidence and the belief. And you have to have that belief be persistent. So essentially, it probably gave you that lift, that mental lift that, yes, I can do this.
Yeah, I would literally wake up in the morning and I had a list in front of my mirror and I would sit there and do the whole affirmation thing. But like,
one of the greatest titles for a book ever. I mean, that's there's nobody who doesn't know that title, right?
Yep, that was it's weird because I'm not a big Tony Robbins guy. I'm not a big rah any of that stuff. But that book,
we all know Unleash the Giant with one.
Yeah,
that book. Your favorite trading setup, 3 words or less. I guess that's very hard, but just they have to be 3 words or less. But just your favorite trading setup.
I can give you 3 words. That's I like playing this game. Rejection at structure.
Okay. So rejection at structure. Okay.
Yeah.
Okay. And that gives you a very, very interesting. So yes, that I can totally see that.
Plus a positive candle in my direction. That's it.
And then a positive candle, directional candle in you. Yeah, we all agree on that. Absolutely. What about your go-to stress relief when the market has been brutal? Like, what do you like? Nothing is working. What do you like to do to kind of, give yourself some relief?
Working out. And this is one of the reasons I love coaching track. It gives me a natural break. Like I will gladly stare at charts all day. Like I just love the game with the markets, the chess game of it. But you know how it is. You stare through all day, especially after a bad day. You start finding stuff you shouldn't be doing. Track and field and just physical fitness in general. It gives me a mental release. It allows me to get anger out. It allows me to kind of decompress. From my day, whether it's good and I don't get overconfident, whether it's bad and I don't get depressed. It kind of separates me.
How often do you coach? Is it like a couple of times a week, or I mean, how often is this thing that you do?
Every day, every day. Yes, I'm there every day, consistent with them. Obviously, there are some days where I can't make it in or whatever like that. But yeah, I'm there every day. I love it. I actually started. One of the reasons that got me into trading was so I can coach. I wanted to coach, but none of the other 9-to-5s had the flexibility that I can, take off. So I'm like, you know what? I'm stubborn as hell. So I'm like, I'm going to do this trading thing. It gives me freedom of time. I can make my own schedule. this will allow me to coach the hours that I want to coach because I can set my trading schedule around.
What is sort of like a day in the life of Akil Stokes like? Like, what can you just walk us through your regular day?
Yeah. So aside from the summers are slow for me, so the summers where I actually get time to relax. But so I'm up 5 o'clock in the morning. I take about a half an hour to do other stuff because I'm awake. I'm gonna jump out your bed and get the day going, but I'm not like mentally awake. So I found myself making a lot of mistakes. So I don't really load up a chart probably until about 5:30 at the earliest, 6 o'clock after I'm actually awake. I do my top down analysis in the morning. I set up my trading day. I know what I should look at, what I need to be aware of, and
You
what
go
not.
through like 30 pairs. How many pairs do you usually go through?
I go through eight, only eight.
Only
Yeah. Or, no, nine. Sorry,
not
nine.
okay.
Yes, so I know them like the back of my hand, and it makes it pretty easy each day because you
Yeah,
do a big round on Monday.
that's super
It's like
interesting. Super interesting
yeah,
because
it's
I
like
know three people that go through like 30, 40 pairs. And I think that actually, you're right, it diffuses your attention span.
yeah. So I know like I can probably tell you what each pair is doing just because it's easy to remember at night. So I do that. I work with the traders on the platform, do any administrative stuff I need to do for the coaching business, and then from about 8 o'clock to say goodbye to the kids, cook them breakfast, all that in the middle. But 8 o'clock to about 9:30, I run a live trading room. This gives me more reps in the market. So I'm working with traders. We're looking at trades like the one I showed you today. We're talking, we're growing, we're doing all that stuff. I do a little post-market review, probably until maybe 10:30. And then usually on most days with track, I don't go into track until maybe like 3 o'clock. So I'll coach track and field from 3 to 6, take the kids to soccer practice, come back, do like a nightly review to make sure nothing slipped through the cracks, and enjoy time with the family. But I have that time from pretty much like 11 o'clock until whenever I'm going into track is whatever I want to do. I can go watch a movie, I can go do business stuff for one, I can go work on something, I can back test, but it's just that is my open time where if I want to work out, I can work out. But I give myself that open time to do whatever I want because that is the reason I started trading in the first place, to give myself freedom of time.
Good. Wow. That's great. That's great. Okay. One trading superstition that you secretly know is nonsense, but you still, practice, favorite shirt, never trade on a Friday, whatever. What's the superstition?
Here's one. I am a believer in reverse psychology, right? So like if I look at a chart and something is moving towards my target, and I'm like, here we go, we're gonna get it. It does the opposite. So I will sit there in front of my chart. It's weird, be like, this certainly won't hit my target. It's never gonna give me profit. I'll like peek over, like, I know it's gonna lose, and like, I swear,
I mean, I do this. The expression, a boiled pot, a watch pot never boils, right?
yeah,
So I always say in my training room that it's the same kind of thing. I'm trading on a much shorter time frame, but I always say the same thing. Like a watch chart never hits TP. Like in other words, if you're watching, like I always go like I'm gonna go get an espresso. I'm gonna go look at another thing, and I always love it when it's like order filled and I'm in the other room. Like I'm not
yes.
like I hear the computer go order filled. I'm like,
Order
well,
filled.
order filled.
I do the same thing. I never watch it. I never watch a trade. I close it down. It just drives you crazy.
It's actually not. I just think that's reality. I don't think that's superstition. I know it's nonsense, but it is the single greatest truth there is. The moment you watch it, the less likely it's going to hit the target. It's absolutely true. I totally agree with it. So, final question of VR, sort of outside of trading and coaching, any other hobby that you like? Is there anything specific you like to do?
Oh, I don't know if kids count. I like spending a lot of time with my kids.
I mean, kids definitely count. Yes,
I'm a sports nerd. So I love sport. I just like enjoying time with kids. I try to be the best father and husband I can be. So right after this interview, I'm going to go. We got a lot of dishes. I'm going to go clean up the house, and that's the best.
You are truly the nice husband. Is your wife the same as my wife? She literally doesn't know where the garbage room is. Like that's really my house.
I'm not going to confirm or deny that, but yeah, I just like I like enjoying time with my kids. I've heard from everyone that like there's this crucial time when they're kids and they want to hang with you, and then there's a time where they may not want to hang with you. So I'm trying to maximize my support and just knowing that some of the best memories I have is like knowing my dad was just there And I just want my kids to be like, hey, when I had this recital, when I did this play, when I had this game, like my dad was on the sideline. And that's the most important thing in my life right now.
That's wonderful. That's great. That's great. So traders across the world can find you at tier1trading.com. That's your website. There you do, I imagine, live trading, mentorship, all sorts of other stuff, strategies. You help people get on board, right? Do you have courses there as well? Do you guys?
Yeah, so it's all inclusive. We have training courses, we have supportive resources, we have chats, community. We try to put everything together. That way it's not, hey, you're buying this, you're buying that, you're buying that. It's like, we don't believe in that. Just come in here, get everything you need to be a consistently profitable trader.
That's wonderful. Okay, that's wonderful. Well, thank you so much. It's been a really lovely chatting with you. You've given us some really, really interesting ideas. I want to thank everybody across the world, whether you are, as I say, in Bangor, Maine or Bangladesh. Come visit us on the Trading Battle. Make sure you subscribe to the channel, hit the link, and we'll bring you more really interesting trading content for the Trading Battle. Boris Schlossberg, over and out. Again, thank you so much, Akil. Take care. Bye-bye.